Hi, I'm Rob, and in today's video I'm going to be going over GSK's most recent quarterly earnings. This is more of a follow-up to my other GSK stock analysis video. Be sure to watch that if you're looking for something a bit more in-depth. Let's look at the numbers. So firstly, their sales were up 10% compared with Q3 in 2020, up to £9.1 billion. In case anyone is unaware, CER is constant exchange rate. It is used to illustrate the business's underlying performance before effects of currency exchange rate, and AER is the true figures for growth. Personally, I like to use a CER figure and keep the AER in mind, as exchange rates always fluctuate, and this could actually be beneficial for companies' earnings, although it did negatively affect them 5% this quarter. Before we go into detail, here's what their CEO had to say about their Q3 results.
GSK has delivered another quarter of strong performance. This is further evidence that the actions we've taken over the last 4 years are really paying off. We saw double-digit sales growth in pharma and vaccines, including 24% growth in new and specialty medicines, and increased growth momentum in consumer healthcare. This has enabled us to upgrade our full-year guidance and, alongside the progress in strengthening our R&D pipeline, reinforces our confidence in the outlook for a step change in growth and performance in 2022 and beyond. At the same time, we also continue to make excellent progress towards unlocking the value of consumer healthcare through a successful demerger in mid-2022, a landmark year for GSK.
So very positive from the CEO, it seems. As mentioned, both pharma and vaccine branches of the business were up more than 10%. GSK delivered strong earnings per share of 23.3p, with adjusted EPS at 36.6p, also up 10% like overall sales. They also declared their dividend of 19p and said to expect the normal 80p a year dividend, which has been paying since 2014 without an increase. GSK normally pay 19p per share in the first 3 quarters of the year and then pay 23p to increase the full year payment to 80. The current dividend yield is around 5.4%. Here's a nice visualization of their sales figures, which shows the effect of negative pressure the exchange rate has been having on their sales. So as their CEO mentioned, they are still planning to go ahead with their demerger of the consumer healthcare branch of the business. They have announced the UK corporate headquarters and seem to be making good progress for next year. As you can see, the new slimmed down GSK is expecting sales growth of 5% and a compound annual growth rate of over 10% till 2026. Now the number that jumps out at me is the ambition of exceeding £33 billion of sales by 2031, or 10 years' time. Pre-pandemic, they were generating £33 billion of sales in 2019. This is, of course, including their consumer healthcare branch, which contributed £9 billion to their £33 billion figure. They're going to have to hit their sales targets for pharma and vaccine branches to really reach this figure and make up the £9 billion of sales which will leave after the demerger. Here we can see their considerations for the rest of 2021 and their updated expectations. Pharma and vaccines are expected the same trend as Q4 2020. There is also some uncertainty around the cough and cold season and how this would impact their sales of healthcare products. For 2021 as a whole, they are expecting single-digit increase in pharma and consumer, with consumer expected to be around 5% and the vaccine business expected to decline, most likely as an effect of the pandemic. In total, they're expecting a decline of between 2 and 4%. However, this doesn't include any COVID-related income, which is expected to add 7 to 9% on their earnings per share. Since releasing these quarterly results, the share price has jumped from about £14 to £15, or about a 6% increase. I still believe that GSK is undervalued, with a large upside, which I'll go more into on my main stock analysis video. Thanks for watching. I hope you found this quick update on GSK helpful, and please like the video if you did.